What's up, everybody? So I want to provide you with a quick update to everything that's going on right now in the market and some potential sectors and ideas and industries where you should be invested heading into a global recession. So just give you a little back history about when we typically see global recessions. You typically have a change in the economic trends, and those changes typically take place based on cyclical changes or structural changes. It's typically one of those two things that will lead you into a shift in the business cycle. Whether you're shifting up, the economy is doing really well, booming, we're having heading towards a peak, or the economy is doing very bad and starting to downshift away from that peak to a trough in the economy. So let me give you an example of a cyclical change in the economy. Cyclical changes typically happen when there is a catalyst or something that changes, such as the economy is getting too hot, economic policy changes, tries to cool down the economy, and then it overshoots and goes a little too far. That causes the economy to cool down. Jobs start, to become laid off. People are getting laid off. The unemployment rate goes up. That's a cyclical shift, things that happen like that in the economy. A structural shift is something that fundamentally changes across the economy over a given period of time. So let's think about back in the United States, in our country, where we shifted from an industrial society or from a manufacturing society to more of a service-based society as to where we are right now. So that's a good example of the difference between a cyclical shift and a structural shift. We haven't seen much of a cyclical shift or a structural shift as of right now, but we are heading to a global recession. The one catalyst that is out there that has created somewhat of a structural change is the appetite of the consumer nowadays. The consumer is totally different today than it was 10 years ago, 5 years ago even, but totally different than it was 20 years ago. My kids don't even know what Toys R Us is. Growing up, I knew the giraffe in and out. I knew all about Toys R Us. They don't have that concept because there is a thing out there called the retail apocalypse, which has been going on for about the last 2 to 3 years now, but we've been seeing it all across the United States and all across the globe, really. You have a big change in stores like Pier 1 Imports, Toys R Us. Many other stores are closing their doors because the retail traffic just isn't there. Online shopping has been the preference of consumers nowadays. That is an example of a structural shift, a structural change in the appetite of consumers nowadays. The one thing that is bad with that and where we currently are right now is having a structural change in the consumer behavior in that nature, on top of having massive layoffs because of the coronavirus, could create a really, really bad scenario potentially. I know that the economic stimulus is in place to kind of aid and prevent massive layoffs, but the economic stimulus will not prevent a global recession. Let me say that again. The economic stimulus will not prevent a global recession. It's designed to help it. It's designed to put a band-aid over some of the carnage. But as of right now, we don't know how bad it will be. In the first week, in the first inches of a round of layoffs, we've had a significant spike in the amount of people applying for unemployment insurance. That spike went all the way up to 3.3 million people as of last week. We're just now getting to the place at the time of this recording where other companies are discussing furloughs, discussing more layoffs, and we do not have a resolution for the coronavirus as of yet. As of yesterday, the United States surpassed China and Italy to be the leader in cases. Now, that's not a good trophy to have, but we do have the most cases now across the globe of coronavirus cases, I should say. Now, that also speaks to how important the United States economy is to the global theater. So, it takes me to my next point. Whenever the U.S. economy enters into a recession, we typically see a global recession that ensues thereafter. Now, some of the things that you can do when you enter into a global recession is really prepare your portfolio to withstand any damage that you may see in that time of economic downturn and once you're inside that trough of the business cycle. Some of the sectors and industries that do really well are the defensive industries and sectors of our economy, and those include healthcare, they include materials, energy, and industrials, and consumer staples more so than the industrial sector. One caveat that we've noticed now is that the consumer staples has done well, although everything over the last 2 weeks has been bitten up and driven down by market correlations. But the energy sector, which historically does really well during economic downturns, is poised to not live up to its historical expectations. There is a supply war that is taking place between Russia and Saudi Arabia right now, which is ancillary and outside of the coronavirus. But when you amplify that with stay-at-home restrictions all across the globe, that pushes down the pressure on demand. It compresses demand a lot. So you have a lack of demand and a supply fallout between OPEC essentially and Russia. So the energy sector is not poised to really do well like we thought it would do and like it typically does during a global recession. So that kind of leaves us with two areas. Those two areas are the industrials and materials. And three areas, I should say, because consumer staples will revive after the correlations and everything right-size themselves and we start to see some normalization in the market again. But looking at healthcare, some of those healthcare stocks and some of those names that are staples and have strong balance sheets and have a lot of cash on their balance sheets will be able to withstand the brunt of the coronavirus. I think of a lot of names, and don't take this as advice to go out and buy any of these names now. These are just some things that I personally researched and looked up, and I suggest that you do exactly the same. But if you think about Celgene, if you think about Biogen, and even some of the consumer staple names of Walmart, Walgreens, Boots Alliance, and then some of like Kroger, those grocery stores that are out there, those are all some of those good defensive names that are able to withstand the blow of a recession. Now, no one is immune to a recession. No one is immune to the economic fallout of low demand in our economy. So you still have to take this with a grain of salt and understand that even though these are typical value names, that the value proposition is starting to erode because many companies are having to suspend their dividends and stock buybacks to maintain cash on their balance sheets. So I wanted to provide you with this update just to get the knowledge out to you about where we are in our economy right now, where we're heading, and why I feel we're heading to a global recession and what we can do to protect our assets and to invest wisely while we're in a global recession. Thank you so much for tuning in and have a great day.